Reliance Capital, 5 bidders likely to be in the next stage for consideration. Tata Sons and Singapore Airlines have agreed to merge Air India and Vistara. Now, Singapore Airlines will hold 25% stake in the combined entity in exchange for the current 49% stake that it holds in Vistara, along with 2,000 crore rupees in terms of investment. Madhiya is standing by to explain the rationale for Singapore Airlines to sign off on this deal, given the fact that they were apprehensive and not willing to go forward, at least till a few months back. Madhiya.
Well, Singapore Airlines has given up a bigger share in Vistara to get a smaller share in Air India. But this could be one of those cases where the less is more. And in Singapore Airlines' own words, there was no other alternative than to merge. Vistara was launched as a joint venture between the Tatas and Singapore Airlines in 2015, and ever since it took to the skies, the airline has struggled to make profits. Vistara's losses have mounted from 400 crores in FY16 to over 2,000 crores in FY22. The SIA Group has given a comprehensive justification on why it agreed to the merger. It said Vistara has been a loss-making entity and will need a significantly higher market share to become cost-effective and profitable. Justifying the merger, it further said that remaining invested in Vistara is as risky as merging it with Air India. So it chose the option where there is possibility to grow. SIA went on to say that Vistara faces intense competition against larger incumbent airlines when it comes to securing air traffic rights and slots. It said there is no assurance that Vistara would be able to secure new and suitable air traffic rights or slots that are required for growth. SIA also explained why staying invested in Vistara was not wise. It said Vistara's organic expansion would be met with multiple challenges and could potentially incur higher costs and more losses. Explaining how it stands to gain from the merger, SIA said it will get access to Air India's valuable and coveted aircraft slots and air traffic rights that are currently not available to Vistara. It continued saying that the proposed merger with Air India would enable SIA Group to immediately gain exposure in an entity that is 4 to 5 times larger in scale compared to Vistara. Given the higher cash burn in running an airline, SIA sees this merger as an opportunity to tap into a larger platform with stronger financial backing at minimal financial outlay. So what do experts make of this merger? According to the Centre for Aviation, competitive dynamics are moving towards a two-pillar system around Air India Group and IndiGo, with the two expected to control 75 to 80% of the domestic market share.
Madhiya, many thanks for joining us. Well,